All right, hello, welcome to this Chapter 3 accounting snippet. We're going to be talking about accrued expenses or expenses that we have used but we have not recorded yet. So one of the most common ones of these is salaries expense. So let's look at that one, okay? So I'm going to go ahead and draw this really long timeline, all right? Kind of help us navigate this. So our balance sheet is to report how everything is as of December 31st. All right, so we're going to say that line right there is December 31st. Now, as you may or may not know, time period or brain's not functioning very well today. Salaries, that's what I'm trying to say. We earn money as we work. Okay, each day that we go to work, we earn money. So as a result, our time periods that we do it is every 2 weeks, and then we get paid on the third week. So I'm trying to think of how well best to do this. So let's say that um, all right, give me a second to think by way of this. Okay, so let's do this. So let's say that the last time we got paid was December 25th. Okay, so December 25th, we'll say was a Friday. And that happens to be Christmas. Merry Christmas, right? Okay. All right. So on December 25th was the last time we were paid. All right. But we've already, because of how they do that, if you remember, you work 2 weeks and then you get paid the third week. So that's the third week. So we've already worked 1 week from here to here. And then we don't get paid until right there, January 1st. Nope, that's one. Oh, no, no, no. Okay, so it's 1 week before, and then this is a week right here. So that's 2 weeks. So we're not going to get paid until like January uh 6th. There it is. Okay. It's January, let's see, second, third, fourth, fifth, sixth, seventh. Actually, if it's January 8th, that's when we're going to get paid, all right? January 8th is the next payday. But we've worked this 1 week ahead of December 25th, and then we work until December 3rd. Actually, it's till January 1st is the Friday at the end of the pay period. Let me see if I can do this better. All right, I think I cleaned this up a little bit better. Um, um, so we have week 1, week 2 of pay period A. That pay period ends on December 18th and it's paid on December 25th. So you see, it's a week later. That's how most companies do it. All right. Then we have week 1B that starts the next day on December 19th, and has week 2B. So this is pay period B, ends on January 1st, but December 31st happens on that Thursday just before January 1st, and it's not paid out until January 8th. So we're used to dealing with the pay period on January 8th that we receive as all that revenue being recognized in the new year. We wouldn't put it on our W-2 from the prior year. It just goes on in the future. But for companies that deal in the accrual base of accounting, we have to recognize this entire amount right here up to December 31st. We got to recognize all of that as expenses in that accounting period. So let's say we had one employee. Let me pull this up. We have one employee. I'm just doing that for simplicity. That gets paid. Let's be generous. $100 a day. Okay, $100 a day. It's kind of a pretty good wage. Let's see. Actually, what is that? Let's do that math. $100 divided by 8 hours a day. Okay, that's minimum wage or not even minimum wage. We're still doing $100 a day. I don't care. I thought it was pretty good. That's because I'm old. All right, so What we have here is, and you're going to have more specific information that you'll be able to glean this from. But basically, this is a Thursday. January 1st is a Friday. So we're going to pay them for 9 days, or we owe them for 9 days prior to the end of the year. So we're going to take this $100 per day, and we're going to multiply that by 9 days to give us an owing of $900 for that employee. Okay, and we have 100 employees, and we would calculate this for each one of them. The reason being is because if on January 1st that employee comes back to work that morning because he's pissed off or she's pissed off because they have to work on a holiday and they're like, I quit, give me my money. We owe them that money, that $900, no matter what. Okay, they've already worked it. We owe it to them. So our journal entry is going to look like this. We're going to go ahead and let's put it over here. And let's stretch it out so I have room. Okay. So we're going to, so on December 31st, our journal entry is going to look like this. December 31st. We're going to debit salary expense, or it could be wage expense. Just keep it consistent. And then we're going to credit salaries payable. And we're going to debit it by the $900. And we're going to credit that $900 there. Okay, so remember, we owe it to them. We haven't paid it to them yet. We're not paying it to them until January 8th for the new pay period. So on January 8th, we're going to do this journal entry. They've done one more day of work in the new year, January 1st. That is the end of that pay period. So we're going to pay them for January 1st. So we're going to also do a salary expense for the new year for $100. Well, our plans are that we're going to pay them. So when we pay them, do we owe them any more money? Absolutely not. So that liability of salaries payable has to be removed. And then our credit is to cash because we're paying them the money. And look, they're going to get paid $1,000. That's the journal entries, and that's how we record our accrued expenses. And then what happens after the fact when we actually pay them. So on December 18th, after they finished working that on December 25th, if they worked 5 days each day and got that, they're getting $1,000 on December 25th. They're basically paid $1,000 every paycheck. And so this paycheck's no different. We're paying them that $1,000, but we had to break it up because we had to accrue that on December 31st. And that's how it works. Any questions, again, please let me know. Otherwise, good luck. Keep it up. Keep up the good work.